Good morning. It's Dean Odell with Seven Gables Real Estate and the Odell Group. It is time for a Tustin Talks. It's the week of September 4th to 8th. I'm in a remote location. As you can see, this isn't our normal background here that we got going on, right? Wanted to make sure that you guys didn't miss out on the newest information. So today we're going to be looking at our normal charts for Orange County. We're going to see how things have been changing a little bit, and we are seeing somewhat of a change. So that's pretty interesting. So let's take it one by one. Looking at the Orange County listing inventory, you can see today we have just short of 2,400 homes on the market. We're looking at the blue line. 2 weeks ago, you could see where we were, a little bit more, and last year, a lot more, right? 3-year average, way more. So we still have an inventory shortage, but let's look how that is relative to the demand. So now we're looking at demand. And as we spoke about in our last Tustin Talks, this is about the time of year demand does start to drop off. You can see how it compares with previous years. The green line, of course, is a weird year. That was COVID, right? But look at everything else. Demand does start to kind of taper off and drop off this time of year. So right now you can see that we are about 130 sales or so lower than we were 2 weeks ago. And we're going to keep our eyes on that. When we look at demand, though, we do like to look at how it breaks down by price. And this is very interesting when you see the change over the last 2 to 4 weeks here on certain price ranges. So let me move forward. I jumped the gun a little bit there. We're talking about Orange County expected marketing time. We like to look at how that changes by price range, but this is in general. This is where we are right now. You could see it's at 49 days. 2 weeks ago, it was at 46. So it has ticked up a little bit. You can see it's still quicker than last year's pace of 61. And you can see where the 3-year average was there prior to COVID, right? At 82 days. So now looking at the expected marketing time by price range, you could see how it's segmented into whether it's a hot seller's market, a slight seller's market, or a deep buyer's market. What has really changed on this over the last 2 weeks is that $2 to $4 million price range. That used to be a slight seller's market, and we're still indicating it's a slight seller's market just because it's the first time it's been over 90 days. But you can see, technically speaking, that's a balanced market. We'll have to see what it's like, but I mean, it was only 2 to 4 weeks ago where we were down into the low 70s in this number. So we are starting to see how interest rates are taking effect, especially in that price range, because a lot of people have to borrow more money, right? So you can also see the percent of the current inventory is almost 18% in that $2 to $4 million price range, and the current demand's 9%. So if you think of it this way, you've got 2 houses for every 1 buyer, right? Where if you look at the lower price range, up to 750, you can see how demand's at 28%, where the inventory is only 18%. So there's actually, more demand than there is inventory. And as you move up the price scale, that moves into the buyer's favor, right? So we're going to watch that $2 to $4 million price range. We're going to watch all price ranges, but that's the one that's had the biggest change in the last 2 to 4 weeks. So moving on, my advice for you guys, going to make it quick today. So buyers, I've told you guys to be patient. Don't have fear of missing out. Make sure you're buying something for the long term. Nothing's changed there, okay? This is really coming down to how you guys feel this economy is going to go, because the only way we're going to see more inventory really come on this market is if interest rates either drop or we have a bad recession, right? And if we have a bad recession, people start losing their jobs, interest rates are going to drop anyway. That's just how it works. Historically, that's what's always happened. We are, depending where you think we are, some people say, hey, think of it as a 9-inning baseball game, right? So a lot of people are of the belief that we're only in like the 3rd or 4th inning of a market correction of some sort in the housing market. Not that it's going to be drastic, not that it's going to be huge. Nobody really knows, but we do know that affordability is just out of control, right? I know you guys know that if you're looking for a house. So moving on, sellers. So sellers, you could see how things are kind of rolling over a little bit, tipping a little bit into the buyer's favor. It could be seasonal. Most likely, though, interest rates, people are starting to lose jobs, right? We're starting to hear more negative news on the economy. So things are changing a little bit here. So it is a good time for you guys if you're ready to capitalize on the market, capitalize on prices. Now is the time to do something. We don't know how things are going to hold up for next spring, summer market. So if you're interested in selling, we'll get that house ready for you. Make sure it's prepped properly so you get top dollar. And I could tell you that, things are still selling out there. We're still getting offers on everything. It just takes a little bit longer to get those offers. And we don't have 5 to 10 offers on everything, right? We might have 2 or 3 if it's priced right. Now, if you underprice something, of course, you're going to get 5 to 10 offers, right? But if If you're pricing at market, probably 2 to 3. So what's market value? Well, that's what you need us for. We're the experts on pricing. We're the experts on getting these things sold for you. We got a great, smooth process. So give us a call and we'll help you out. Reach out, comments, subscribe. We want to hear from you guys. So we will see you on the next Tustin Talks. Thanks. Bye-bye.